Well, in this session, I will be specific to let our investors, our students know about the best investment option available. Usually, there are two types of people who invest in the stock market. One known as investors, they are the rational investors, real investors. Others are speculators. So always avoid or prevent yourself from being a speculator and become a relevant investor. So in continuation of that, I have selected some healthcare companies because the day 29th of November I witnessed these companies were in all green colors, like showing the bullish trend in the stock market, Indian stock market, NSE and BSE. And these companies were known as Sun Pharmaceutical Industries Limited, Davis Laboratories, Dr. Reddy's, Cipla, and Biocon. But still, it doesn't make any sense that out of these five companies, investors will prefer to invest in all these companies. Maybe they will pick some one or two companies from the health sector, and one company from the automobile, one from the consumer durable, FMCG, or oil and gas industry, or banking industry, or finance industry. So they have basically every time it is high time to invest in the diversified portfolio. Always make the diversified portfolio. So there are the five companies, the performing companies in the Indian stock market. The one has to find out which one is the best suitable company so far as the price to earning ratio is concerned. So we have enough data for that, and don't go for. I suggest investors. They sometimes feel attractive or feel fascinated towards the current market price. Okay, the current market price of the DRL is showing the 4,829 rupees in the National Stock Exchange. Okay, so it doesn't mean that this company will further show the bullish trend and will perform better than the Cipla, Biocon, or Davis and Sun, or some other companies in the same sector. And after that, Davis Laboratories showing that more than 3,000 the current market price, and Sun Pharmaceutical Industries Limited, the current market price is 512 rupees. Cipla 746, Biocon is even lesser price available, 429 rupees. So it doesn't mean CMP is not at all criteria to let investors know about the investment. Okay, this is the best suitable price, and the higher the price, higher the return. So it is not the criteria. Another important thing is that the market capitalization. So if you take a look here, the market capitalization of the company showing is the maximum Sun Pharmaceutical Industries Limited. Okay, this is good because the outstanding shares for the trading is for this value. These crores rupees, 122 crores. Okay, 122,738 crores, 95,770 for Davis, and this much of this. So this is also not one of the criteria for investors that this will be the best suitable investment in the stock market. And dividend yield, obviously not. That the net profit quarters, they may vary, so it is not important that it is, for an example, for the Sun, 725 crores net profit. Okay, this may be good for the company. They can distribute the dividends among the ordinary shareholders or for themselves for further project investments. So maybe some short criteria, but it is not on the basis of that, obviously not at all the best criteria to decide what is the best optimum investment in the share market, in which company one should invest. Sales, okay, showing that level, Cipla 3711 crores, 3201. So it's not relevant, and it doesn't make any sense that one should invest on the basis of the highest sales. So what left? left is this book value. Okay, this is very important, crucial, but usually I prefer this ratio. It's financial ratio known as the price to earning ratio. So what exactly the price to earning ratio tells? So the price to earning ratio is a ratio showing the current market price and which is divided from the earning per share. Okay, so this gives you the price to earning ratio. So here this Sun Pharmaceutical Industries Limited, if you take a look, it is showing that 42.59 ratio. Okay, so it means if I write one slash and put one here, okay, just make like this. Okay, so this will let you know the interpretation of the price to earning ratio. Let me do like this and then I will try to explain what exactly I have done here. 42.59 divided by 1. So it means, so for 1 rupees earning, one has to invest 42.59 rupees. Okay, if he intends to buy Sun Pharmaceutical Industries Limited shares, and merely single stock cannot predict anything. If I say, and I do not take any other peer comparison, if I singly take Sun Pharmaceutical Industries Limited, I say 42.59 is the PE of that company. So it doesn't make any sense. It does not predict what exactly is the point here about this price to earning ratio. Another important point is that if I take Davis Laboratories Limited, so it is showing that the PE is 54.47. Yeah, that means to earn one single dollar, one single penny, one single rupee, the investors, the relevant investors have to spend 54.47 rupees to buy that Davis Laboratories Limited. Third peer comparison I have done here in the DRL. In the DRL, that is showing 32.7. The P ratio is 32.7. That means for 1 rupees earning or $1 earning, investors are supposed to invest 32.7 rupees in that stock. In Cipla, okay, it is showing very less price to earning ratio, which is 26.78. So that is one of the buy, indicating the buy signal because of the lowest price to earning ratio. Earlier there was a myth among investors, like higher the P will tend towards the higher return. So it doesn't make any sense. You just see what exactly you are about to earn. In every single stock you are about to earn one single dollar. Okay, in a one single dollar or one single rupee, how much you are going to invest. So obviously if you go to the market, okay, and you get some option that everywhere you will buy, everywhere you will get the same amount of earning. So how much you are going to invest? The lowest investment you will choose. So lowest investment is being selected here, that is 26.78. That means to earn one single dollar, one has to invest only 26.78. No matter what the current market price is, no matter what is the dividend yield, no matter what they have earned so far as their net profits are concerned, their market capitalization and their sales. But yes, that counts the book value. That I will let our students know in the next session. But here I analyzed about the Cipla company. Okay, so amongst all these 5 peers, Sun, Davis, Dr. Reddy's Laboratories Limited, Biocon, Cipla of course. So if you stand chance to invest in one single stock, and you suppose for an example you are bound to create a diversified portfolio, so you are selecting the Cipla, one of them taken from the healthcare industries, and another one you can take from the banking industry or the oil and gas or automobile or the consumer durables, FMCG. There are a lot of options over there. While how does PE become one of the decisive factors? Always remember that the companies, if you select from the PE point of view, should belong to one single industry, one same industry. That is why I have taken here same industry comparison. That is, then only you will be able to decide on the basis of the price to earning ratio. Otherwise, there will not be the appropriate results. So, for example, if you take one single company from the automobile, another is taken from the consumer durables, and the third one is taken from the healthcare industry, fourth one is taken from the banking industry, fifth one is taken from the education industry. So it doesn't make any sense. You cannot decide, and the PE will not let you know the exact information about the investment. So if you want to know exact information about the which one is found to be the feasible and appropriate investment, you must take the same industry comparison. So while selecting the companies, make the same industry from those companies here.